And joining me for a further look on what's playing itself out on that market scene is Odwa Magwentshu from Trive Investments. Odwa, good afternoon to you and a happy Monday.
Hi, Notando, how are you?
Wonderful, how are you?
Good.
All right, not a bad start to the week. We've got quite a bit happening. I think the biggest thing on my radar this week, Odwa, is certainly oil volatility. We saw the OPEC countries come out speaking about production cuts, and then market commentators saying that there wasn't sufficient conviction around these cuts. We did see then the price of oil falling closer to the end of last week. What is driving, all of this volatility in our oil right now?
I think firstly is the conviction. There wasn't a joint statement stating whether or not they will be cutting unilaterally across the owners or parties in the OPEC team. So we are seeing that, and also the price hike in oil was also on the back of tensions globally, and now as those tensions have eased up a bit, we have seen then that the drop or fear in the oil price going down.
We'll be watching that one very closely. It means a lot to us here in terms of our inflation picture. From a U.S. data perspective, non-farm payrolls expected to be out this week. I'm wondering if we're keenly awaiting these numbers, as we often do, or if last week's inflation print is sufficient for now to keep market commentators and investors at bay in terms of the volatility that we see every time the U.S. releases a data point.
Non-farm is always a key indicator in terms of what's happening in the markets for the week or to what to expect for that particular month. Even though we're not expecting any decisions or commentary from the Federal Reserve in the U.S., I do think that this week's non-farm payroll is still going to be important, to put us in a tone for what's to expect in December, as how the market's going to react to it.
Yeah, let's talk about December. We saw a great November for markets, not only here at home, but globally as well. We're already having conversations about a Santa rally. What are your expectations here? Do we think we have the fundamentals for a Christmas boom, as we often see?
I think currently, yes. This year has been very unkind, to say the least, to investors. And I think, with everything cooling off, especially with inflation rates, even though we did see a slight spike locally, I think the December rally is one that people are looking out for. However, I do not think that it's going to be as intense as previous years, and mainly because the consumer right now is not having the best time.
Let's move on to some company news now. I'd like to start with Nampak. Now, of course, Nampak has gone through, I would say, the most. We've seen Phil Rue come in as CEO. We've also seen the rights issue go through, but we're still speaking about Nampak's debt. In fact, Odwa, it looks like the debt issue isn't as stable as investors might have hoped at this time. Let's talk about this company here, and maybe even the competition that is now in the packaging sector that is putting pressure on them.
Nampak has, as you said, has been having not the best of times recently. Mainly, we saw losses they faced with the Nigeria and Algeria with the devaluation of those two currencies. So, the business itself is currently facing a lot of troubling headwinds at the moment, with a 2 billion operating loss. Operating loss for the current period. Whenever a business is struggling, it's never a good sign to see more competition come into play, and this is not playing out well for Nampak. And they've tried a lot this year to try and fix their financial standing, with, as you said, trying to raise some capital here and there. It is currently definitely in a very difficult space, and also, with the market in large being a tough market to maneuver in right now, I do think that the business, even though they think that they may be starting to have things in order, is still going to have a bit of a rough time.
Yeah, it does look like that investment case is under threat slightly. We also heard news today of Sibanye losing out on that Mopani copper mine in Zambia. Of course, they lost out to a company from the UAE, one of the parastatals there. What are your thoughts on this one? We know that Sibanye has also spoken about raising capital. Investors didn't like the story. But of course, a copper asset is exactly what many miners could be looking for at this point, considering where we are with the energy transition.
Sibanye has been very busy this year looking at a lot of acquisitions, with also lithium being one of the acquisitions, as you mentioned, with the debt the bonds they were releasing. So, I think this is not going to be, Sibanye has been having a terrible year, to put it lightly. And this, missing out on this particular deal could add to that beating the share price has been receiving. However, I think it was good on the management side to look at diversifying the resources. However, losing out on this could be more damaging as things go ahead.
There's only a finite number of these green assets, Odwa, that are available out there. And I'm wondering, of course, we'll see lots of miners scrambling for them. That might shoot up valuations. How important is a good balance sheet at this point?
It's very important if you have a strong enough balance sheet to try and diversify right now for these different miners. And as you say, it is a finite commodity, and it would have been a great win for Sibanye if they had won this deal. Unfortunately, since that has not happened, they must now, try and look back and find something else if the balance sheet allows it.
And then I must touch on Alex Forbes. They've actually posted a rather, I welcome the set of numbers, headline earnings per share jumping up almost more than 96%. They've moved out of insurance, really focusing on investments and retirement. It might have looked like a bit of a gamble initially, but it seems to be paying off.
100%. The business is very good results that they posted, and you are seeing the also the acquisition of Outsurance Holdings Limited to get that long-term view in terms of long-term insurance, into their mix. I think the restructuring of Alexander Forbes has been very great, and they still have more. We still have to wait until the business reaches its maturity. So I think that they did well in restructuring everything, and the results are showing promise there.
Fantastic, Odwa. I'm keen to get your stock pick, but first I'd like us to reflect on counters that your industry peers have also liked.
My stock pick, Ntuleng, is Mr. Price. So we think it offers value at the current pricing, given that recent pullback in the share price. So in the recent report, it did report, some headwinds, also struggling from the same issues we've seen in other retail companies, in that the consumer is under pressure and therefore spending less. So volume suffered there, HEPS was a bit lower. But we're hoping that in the new year, once the economy shows signs of improvement, interest rates are cut, inflation comes off a bit, the consumer will be in an improved position to start resuming some of their purchases for Mr. Price's goods. It's also got a leading position in that discount value segment of the market, so it's pretty well positioned in South Africa. And in terms of the valuation, it is trading at quite a good forward PE of 11 times and looks quite attractive. So that's our pick.
I'm going for Bidvest.
Okay.
And you don't often get, I don't think you often get a chance to buy a truly good company, quality company, good management, good products, good history at a little bit of a discounted price because of a small stumbling block that they've hit now. So I would once again go for Bidvest. I think it's the right thing to do.
Well, I'd like you to get your thoughts on those counters. Bidvest, a diversified conglomerate, as well as Mr. Price, a retailer.
Starting with Bidvest, I really like the company. I think that they have been, well positioned, especially through the recent years, with the sale of solar. They did release something recently where they said that they could be seeing a bit of a downturn, but I do think in the long term, the business is very well diversified, and I like that pick. And as for Mr. Price, there's a lot of ifs that are necessary for that to come into for it to be be a great pick. The share price has been turning in recent weeks, so that has been a plus on that side. And correct, if the consumer gets more easing in terms of the pressures they're facing right now, we could see them benefiting mid of price, that is benefiting from retailers coming back and shopping more.
And Odwa, which counter do you like today?
Today, on the back of course, the gold price reaching all-time highs, it's Harmony Gold. That's my pick. The business is looking well. They did turn around in the last financial results that they released. They showed a turnaround, showing a profit as well, and the PE ratios are quite nice at 12.4 forward PE. So that's my pick.
Odwa, it's a pleasure getting the week off with you. Thank you so much for your time. That was your midday markets update with Odwa Magwentshu. He's from Trive Investments, South Africa.